Hey guys, welcome to Tickzon Mentorship, where we try to turn our hindsight into your foresight. Welcome today and welcome to the Tickzon Mentorship. Take home and budgeting, resource calculator, everything, and it'll be your little companion in your journey into getting better with your personal finance. It has a lot of resources. How do you budget if you're a student? How much you're taking home post tax? If you're working, or even if as long as you're working as a student, regardless. You can track your spending in there, see how you're going up and down through the months in order to help you get to where you want to be. There's also things for your savings goals calculator, as well as emergency fund, as well as resources to improve your financial literacy and how to deal with if you have large amounts of debt. Also, that's there, and just general FAQs about the sheets. Now in a minute we're going to go into understanding about the sheets. Once you get it, it's simple. One sec. Now, just before we go into showing you how this resource works, we're just going to quickly tell you what Tickzon Mentorship Scheme is, what our mission is, and what we're trying to do. Now, Tickzon Mentorship Scheme is a scheme which I started to try and get people who are 18 plus to go back into schools, secondary schools, youth clubs, and just basically youth zones to educate the youth and younger people and people in our generation about stuff that's not being taught in schools around financial literacy, mental health, self-worth, self-esteem, self-love, choosing their careers, alternatives to university, politics, societal structures, why things are the way they are, politics, and so many more, just to help you guys succeed in life. And it's basically essentially prepare you guys for life and help you along that journey. While we learn, you learn. So hopefully our hindsight can turn into your foresight. And obviously, because of financial literacy is very important to us, especially that being one that's seriously not taught in schools, hence why we have this today. So I hope this resource helps you. I hope you enjoy it, and yeah, enjoy. Hey guys, welcome to the Tickzon Mentorship Scheme take home and budgeting calculator and tool. Out here turning hindsight into foresight. It's going to be your companion on your road to personal finance, personal liberty, financial literacy, and all that good stuff. So thank you, welcome. The first thing we'll ask you to do is duplicate this document so you can send it to somebody, to a friend, a family member, for everybody. This is accessible to anyone and everyone. So we're trying to turn our hindsight into foresight. Obviously, we've got a lot of things for you to do in this document. We've got the how to use tutorial, in which you're in right now. You got the tax and take home pay, where it calculates how much you're going to take home post tax. You got a student loan area where you can do that one. You got the budget where you can do your budget planning for the month. You got your spending track, which is basically your track spending area, but we remix the thing. So that's how it be. We've got the summary area where it shows you all your spending and all that, and you got to understand money, you got debts, FAQs, and notes. And obviously we're going to get into all of that. Now obviously, I know this video is kind of somewhat on the long side, but once you finish watching this video the first time, I'm sure you'll be able to navigate this thing, no problems, and all good. Now before we start, understand, we are not financial advisors. We're just aiming to help and inform and present you with a guide and some tools in order for you to reach your goals, your own personal goals. Obviously, if you want to become a mentor with Tickzon Mentorship Scheme, let us know. On the right, you see some of our mentors in our mentors workshop there. Down here, we had one of our hindsight days at our youth club. Obviously, these are the youth them, but we can't really show their face. So obviously, my man with the glasses there and me mate over there. So now straight into the sheet. Now, tax and take home pay. So now with the tax and take home pay area, as you can see, we have two calculators. We have the yearly set wage. So for example, if you are in a grad role or in a job or a corporate job, you normally know what you're earning per year, whether it's 27k per year, 30k per year, or 40k per year. And you can just use this one here, 27,000 for example. And then over here we have a monthly variable income. So if it's that you're working, let's say in Sainsbury's or in any of these different jobs that your money varies per month, as long as you're using this, only works with the England payee system. So if you're normally employed by England, I also believe it applies to Wales. So let's say you're working at Sainsbury's or McDonald's, you're earning £400 per week. That's £1,600 per month, and it tells you automatically there what you're earning per year. Now if you want to even double check it, you come over here and you put 19,200 over there, you get the exact same thing. Now you can only enter figures into the boxes that are highlighted yellow. You can only enter the box into them. The calculators work until whatever, there's no limit on the income that you can check on this. Even if you're earning £150,000, it will automatically tell you how much you're going to pay in tax that month. Now this is the per month. This area that's white, you can't enter. You can only enter in the yellow. Now here's obviously total allowances, like if you're getting any travel allowances from work. Let's go back to 27,000. And let's say for for this we won't. And then obviously percentage going to pension. In the UK, in England specific especially, you are required to contribute to some kind of pension plan, or employers should provide it. Obviously, if you're working and you're doing like Sainsbury's or some jobs, there may be a way you can work around actually contributing to that. So we'll keep that at 0. So this is how much you take home post tax. This is how much you take home post tax. Now, assuming you're coming to a bonus month where you're going to, let's say, get £500 in your bonus, it is pre-tax money, so it adds and it increases your taxable income for that year, and then you see what you're going to get that month. So if it's March, April, whatever is tax bonus month, then any salary sacrifice refers to any contribution you're doing within work, whether it's like an employee scheme or something like that. All those things are post-tax money, so it just subtracts how much whatever you put there from there. So it just takes £100. So let's just go back to normal, and you have 0 there. Now, one more thing we're gonna so here, after you put in your wage of how much you're earning, it will recommend to you how much you should save first, which is pay yourself first, which is a concept of paying yourself first before you pay anyone, which is 10% of your income. And you see that highlighted in blue for the monthly, and you see that highlighted green for the yearly. Now, also, because obviously people are doing different things, if you are paying back student loan, there's down here you see the student loan settings. So over here you can adjust what student loan plan you're on. So if you went to uni post 2012, which is most people right in the workforce now, it is plan 2, which is paying 9% over 26,575. And then if you just do 1, you see that your student loan, you haven't made enough really to pay back student loan. And then if you go to plan 2, which is if you put on setting 2, which is doesn't pay, which is that you don't pay student loans. So assuming you're actually in uni now, or you didn't go to uni, you went to an apprenticeship, you just set this at 2, and it won't deduct student loan from your pay. And then you have you see all the settings there. On default is on plan 2, and then you have to just come over and change it. Then you see down here the settings. So the 1 is paying plan 2 student loan, and 2 is you don't pay any student loan. 3, you're paying plan 1 student loan, so that's if you went to uni before 2012 or after 1998. Postgraduate loan, if you did a master's. If you did both an undergrad and a master's, you set it on 5, and if you did both an undergrad and a master's, but you did on plan 1, go to setting 6, and it will automatically change there. Now down here you see recommended budgeting technique. So you have the 50, 30, 20. Also remember, these budgeting techniques are all just guides. If you can spend under 50%, if you can spend under in any of these categories, that's completely fine. But these are just suggestions depending on the kind of budgeting technique you want to use. Now, obviously, this is green because it refers to the yearly set wage, and this is blue because it refers to the variable monthly income. Always save before you pay off debt. Obviously, if these are all guides, so obviously I know for some people they're using over 50% of their income towards their needs in this being your household, your rent, mortgage, utilities, and food. And obviously if you are spending over this and you're going to 80%, then understand that these are all guides you want to work towards, because you're really too close, which means that if something happens, that you can easily go broke. Now obviously you have our logo here. If you click on our logo, it will take you to our YouTube channel, so please subscribe. And like it says here, these works on all incomes. So even if you earned 60K, it doesn't really matter. It takes into account everything, including losing your personal allowance, everything. And then yeah. So now you see all of these things here now. So you see your wage here. This is how much you get post tax, 1787, 1391 here. Now this automatically jumps into the budget area. So this is where your planning area, the budget area, and this automatically will give you the ratios of how much we recommend you should do. Obviously 0 in debt, and then this will show you all of that here. If you're using the monthly, obviously if you set that to 0 only, this will show up. Now before we come to this area, we'll go to the student loan area. Now the student loan area is divided into 2. If you pay your rent monthly, pay your rent monthly, pay monthly rent or rent monthly, and this one is if you pay your rent in installments. So for example, and on default it will be just at this date, but you have to change the dates yourself. So let's say your student loan, let's say for London, 4,000. Again, the ones that are highlighted yellow is where you can input stuff. Now let's say you get your first one on the 10th the 1st of the 10th of 2019. Then you get the other one, the 20th of January 2020, and let's say 24th of 04 2020, and the end of, you put your end of your tenancy, let's say end of June 2020. Now, this is how much you have, and this is how far it has to stretch to. So it automatically divides what you've got per month, and basically the number of months between those payments. So you have 3 months between these payments, so you need this to stretch for those 3 months. So if you put in here let's say your rent is 600, let's say your utilities is £100, and your food is, let's say, £200, and let's say 0 for transport. Now you can put zeros in utilities if it's included in rent, and it automatically will say, okay, cool, you have enough for basics, which means you have enough for rent, utilities, food, and transport. Then we recommend that you save 10% of whatever you have left, which will automatically show you there, which is savings, and then anything else you can use on anything else. And that's basically you living your best life. You know, enjoy uni, live it to the fullest. Obviously, if you're working per month, you get any extra monthly income. If you come over here and put 200, then you see automatically goes there, but it will increase how much we ask you to save, and then that's what you've got. Now, for example, if for some people, student loan is Buki, and it gives you different, it may give you different amounts per each installment. So for example, if you get 1,500, 2,000, 3,000, this will automatically tell you that based on your rent per month and your basic utilities, that you need more income, and you need at least 200 to live, which means rent, food, transport. So basically you have shelter, you have food, and you have a way to get to uni. It doesn't include savings or anything else, but at least this one will tell you have enough for basics. So for example, if for example you've got 400, you have enough for basics, but you have nothing left to save or anything else. Even for this one, if you have 233.33, it'll tell you have enough for basics. So that's your extra income that you have to get. Obviously, if you need more income, there's ways to get it: family grants, bursaries, start working. There's things that we'll be putting on, or surgeries we'll be doing for CVs and stuff, but use the resources within your university. Now, over here, if you're doing installments, similar thing. Let's go continue with London, 4,000, 4,000, 4,000, and then obviously automatically tells you your total there. Let's say again, of the 10th, 19, 20th of 04, 2020. No, 20th of 01, 2020, 20th of 04, sorry, 24th of 04, 2020, and 30th of 06, 2020. Now, right off the gate, I want to tell you about one bug that is here. So basically, because of the way I did it, I've gone, you guys don't even know how many versions I got to this point, so this is some mad thing. But basically, because it does absolute months, obviously you have to continuously put the date before. Like, for example, if you put 18th of April 2020, it will just say it's 2 months in between that. So this one over here refers to how many months before you get to that, and this right here refers to how many months you get to here. So to overcome that, even if you're going to get your student loan on the 18th, basically put this date as how far you want that student loan money to stretch. So you want this money to stretch to this date. So for example, if you want this to reach, let's say the 25th of 01 of 2020, then that will reach that. If this one, make sure 25th of 04 2020, and then 2020, and it will automatically go back to free. So that's one of the bugs. Now, if your utilities including in your rent, again, just leave it at 0, put 200 here. Let's say transport 200. Now, rent installment, let's say 2,000 on each. Yeah. Now, this will automatically, let's say, it comes at the same date as your rent, as your student loan. Now this will automatically tell you how much you have left after your rent is paid, and then it will divide what you have left to cover food, transport, and tell you what you have left for anything else. And if you're working per month for this autumn period, for this spring period, autumn period, winter period, and spring period, hence the
kind of orange, yet blue and green. Now, assuming, let's say we go back to the other one and you had 1,525 and the 4,000. Now, automatically it'll tell you, look, you don't have enough income. Right here, it'll tell you you don't have enough income to cover your rent, even with that installment. So it will tell you need this much minimum to live per month. This one, it'll tell you, okay, you have some money left over after rent installment is paid, but then it lets you know that you don't have enough to live through this period. And for your last installment, that this is how much you have left, and it will divide this based on how many months you want your money to stretch. And then it will basically say this, you have enough for basics. So that is the student loan area. Obviously savings 10% of whatever's left, and anything else, enjoy uni, live your best life, guys, and take every opportunity as it comes. Now, go into the budget area. Now, obviously, you know how much you're taking home, you know how much you've got to spend. Now, if here, those two are obviously taken straight from here. Let's say we change this to 1,800. Ooh, I'm American now. Back for about per month, it automatically changed it there. Now, this one over here is the custom take-home pay. Again, it's highlighted in yellow, so you can enter in there. Custom take-home pay. So, for example, if you're receiving a bursary, or if you're not working, or you're receiving some, so you're receiving regular income from outside, but it's not necessarily from working, or you're self-employed, so your self-employed taxes are filed differently, for example, all of that, then you can just come in here and put in your custom take-home pay. Or after you've known how much you can spend after student loan, then you come here. So let's just say 1,600, yeah? And then it automatically tells you the ratio here. Now, for example, let's just put in some numbers. Let's say 600 there. Let's do 600 on there. Let's do 400 in savings, and let's not touch debts yet. We'll come back to debt. Now it automatically shows you the ratio of how much your money is going to per month. Now obviously this is the guide. 50 recommended is top the guide, 50, 30, 20, and 0 on debt. Now if you're below that, it will highlight green. It will highlight green that you're below that. If you're under this, it will highlight green. Now if for this you are above your 30% on wants, so it will highlight red. And on this, it will highlight green on your savings if you're under 20%, similar to here at 50%. But once you go over 20%, then it will highlight dark green to indicate that you're saving really well. Now, here it will tell you in the bottom one that this can't work, because basically you're spending more money than you actually have there. So you're spending 5% over the amount of money if you're doing monthly over here than you actually have. Now, let's say if I change this to 2,000, then you can see that turns into 30%, 30%, and it's all good. And it tells you that it's fine. Now, similar to how we said over here that these are the different budgeting methods you can use, you can come here and you can change this. So it does let you touch this. So you can say, okay, based on what I'm doing, I want to do 60 on that, and let's say I want to do 20 on this. Now, obviously, when you change it, it will go red if the ratio doesn't balance to 100% of what you've put here. Now, you can go to 20 and have, let's say, 60, 20, 20. Now, if you obviously once you change it from the recommended, it goes white to show that, to indicate that you're using something different. But once you go back to using the recommended, which is 50, 30, 20, it goes back to the normal color. So you can adjust these things here, and then ultimately, for example, if I adjusted this to 40%, if I adjust this, then it will indicate that you're doing fine. So obviously you can see that changes to, if I go to 20%, sorry, 30%. So you can see as I change this to 40, because it's below, it goes green. It goes green to show that you're below it. Now, for example, if I automatically change that to, let's say, 1,400, then you will see that it will go dark green to indicate that you're doing fine. Now, obviously, these have to balance. So if your spending is over, then it tells you can't work. If the budgeting method you've come to use doesn't work, it tells you can't work up here. Now, obviously, you've got debt, similar thing, 100. Obviously, you can edit all these things. You can edit this. This is just like a guide. Let me put this back to 400. Now you see for debt, it will always be red because the aim is not to have any debt. But again, you can change this over here and say you want 10% of debt, but it will stay red completely at every point in time because you have So it won't change to green, similar to like over here, because you have debt. Now down here we have tips. Obviously, pay yourself first. You pay everyone first, but you don't pay yourself. So that's putting towards your savings. So always save before paying off debt, because if you don't have any savings, then you quite easily go back into debt. Always pay your bills on time, minimum payment minimum. If you can't pay a bill, call them and rearrange. They want their money, so they'll rearrange with you. Automate as possible. Protect your credit score with your life. Pay off credit cards. There's ways to use credit cards to your benefit, and there's a difference between needs and wants. Obviously, go to FAQs if you have any questions. And here, down here, you have emergency fund calculator. So when you plan for the month and you say these are my needs and these are my wants, it automatically adds the total and say this is okay at your current lifestyle. For you to live, to have an emergency fund, which is money for you to cover your lifestyle. An emergency fund is basically a pot for you to cover your living expenses for an X amount of months. So normally they'll recommend 3 to 6 months. So to save a 1 month, 3 months, 6 months, this is how much you need. And if you put in £200 per month, this is how long it will take: 6 months, 18 months, 36 months. Now, if you just wanted to put like an arbitrary number, you wanted to put, let's say, £500 away per month, then this is how long it will take you to achieve that. Now, obviously, these tables, you can enter it, and these two calculators down here. So now, for example, if you want to disregard how much you actually spend per month, which is the 1,200, you can come here, emergency fund goal. So for example, you wanted to do, let's say, arbitrary number. So you wanted to save £10,000, and you wanted to start on the 20th of 2020, and you wanted to save that within the next 4 years, for example, by the end of June in 4 years, 30th of 06 of 2024. Now it will tell you how many months you've got and how much you have to put away to save that for your emergency fund. Now down here you have your savings goals calculator. So we all have different savings goals. Remember, most of our personal goals are actually financial goals. So let's say I want to save for a house, let's say a car, a date, headphones, and down here again you can now say, okay, let's say 20,000 as a down payment, let's say 2,000 on a car, a date, 500. Who am I spending that on? 50 pounds. And just a holiday. And then this is just a good way for you to kind of see, okay, let's say the holiday, it will take, let's say £900, flights and everything. And I want to start saving for this. I want to achieve that I'm going to start today. And I want to achieve this in 5 years from today. Obviously it goes up because you can't touch these ones. So normally if you press enter, it will go straight to the one that you can do. If this one I want to do, I'm going to start at the end of the month. Don't at me, I don't know if it ends at the 30th or 31st. And I want to do this as a Christmas present for myself. It takes 6 months, 300. Oh, same thing. Wow, maths. Date, well, let's say lockdown is over. 01, 06, 2020, and I want to save that by September. 01, 09, 2020, etc., etc. So you understand. So it takes 3 months, and that's how much you have to put away in towards your savings. And you can edit any of these things. I can turn this back to 1, 2, 3, 4, 5. Oh wow, I skipped one. But yeah, so you have your savings goal calculator, custom fund calculator, which you put your end and start date, how much you want. This is the custom. If you put that 0, it goes back to yellow. You can, any tables like this, you can enter in them. All the needs saved once you can enter in them, and obviously custom here, you can save changes to whatever. Now let's go to the spending track. Now obviously this tracks your spending. Anywhere that's highlighted yellow, you can enter stuff. In the first month, you'll be required to put in more information that you probably need to in the next ones, specifically in any surplus and your total savings. But first of all, here you can edit this. Let's say I want to start this as April. Now to take home pay, I know how much I'm taking home. So let's say, but I'm just going to say 1,600. Now any previous surplus any previous surplus refers to how much money you actually have in your account right now. So this is real life. Let's say it's 21398. Carry over is any unaccounted for money, for example, under your pillow, in your room, etc. Somebody gave it to you, let's say £100, and then money sent to you by a family member, brother, or whatever, let's say 100. Yep. So this all goes to your account. Now in your first month, you put your current total savings, which let's say is 2,000. And here, if you put any money towards your emergency fund, if you put, let's say, £40 towards it. Now, if you take any money out from your savings during that month, for the first month, just, if you take 100 out, it automatically goes into here. But for the first month, you will have to just say how much you actually have in your savings. In every other month, it will automatically do it itself, because the first month it doesn't know how much you have currently in your savings. So let's say in this month, if you take out 20, it automatically takes 20 out from there and adds it to your account. And then if you do towards your emergency fund, say £50, it automatically takes it out of your account and adds it to your emergency fund. So now we have, this is April. I can call this May. I can call this Happy. You can call it whatever you want. You can say B-Day month, whatever you want to call it. Yeah. Now, down here, you have again your needs. So this is your actual spend. Obviously in budget, you're actually planning how you want to spend. Here you talk about how much you actually spent. So let's just go again with random numbers. Yep, 600. Let's say savings, help to buy. I'm just gonna say 200, and let's say 200 for pay yourself first. Yep. Then down here for wants, Patty, pre-lockdown, it went 800. And then down here, let's say I use my credit card. Now, if you use your credit card to pay for stuff, when you're putting it here, put it on your total owed. Don't put it, how much you spent, put in your total owed. So for example, I put 200, and then you now say how much you actually paid back. Don't put it as your income. If you're paying for something here, in your wants, your needs via a credit card, put it in your total owed, because it's not money that was in your account, because you still have to pay it back. So now if I put in 200 but I paid the minimum or more than the minimum 150, it automatically carries what's left into the next month. So it carries on to how much you have left owed. Now you can see up here, it tells you a summary of how much, based on how much is in your account, how much you actually spent. So 38.6% here, 28.9% there, 19, etc. Now surplus is basically any extra money that you had in your account after all of this was accounted for. And because you have debt left, it tells you keep going, refer to our debt section, which we'll get to in a second. Now in next month, let's say better month, 2000, no, it won't let you do any previous surplus. It just carries over from the next previous month. Now any money sent to you, let's say 200. I took 20 out from savings. Let's bump up our emergency fund to 100. Now needs, I changed house, 800. Savings went down for a bit, 600. Oh, it didn't go down, it went up. Oh, cool. Once 500, that went down. And then let's say I spent 100 on my credit card this month, but then I went and paid back 150. Now you will now see that, okay, you now have zero debt left. You're debt free, but this is how much you paid towards debt, but it's reduced by 0.5% from the last month. So it compares how much you spent based on how much you actually have in your account. So this was a reduction in terms of proportion of 16.3%, because in this month you did 38.6% of how much you had that month. And then it shows you obviously how much you have in your emergency fund, total savings. Obviously our logo, if you touch it, it will take you to our pages. Now let's do one more month. Let's say in this month I had 300, and then that took out from my savings. Now let's say 40 to say that. Let's say I only got slow month, I got £500, and then let's say rent was 600. I'm still saving. I saved 400. Needs, I went down to 200. Credit card again, but I paid it all off. No, this month I'll carry it over. Yeah, and I only paid 50. Now automatically, as you see again, it takes the 100 towards into next month. Now up here, what you see is that down here it will say surplus is minus, and it will tell you unaccounted income. So that basically means you didn't account for some income, and then basically you'll carry over a minus and tell you you're basically minus in your account. So for example, let's say someone sent you money to help you cover rent. Let's say your brother sent you like £400 to help you cover it. Just put it in the money sent to you, and then it corrects it, and then it says a surplus. Or if you use the carry over if it wasn't sent to you. And then if you now come over here, let's say again, 500 was taken home, again the surplus, no carryover, none of that. This month we put 50, and then let's say 500 400, 600, and I paid back just what I had been owing. Then automatically tell you, well done, you're debt free, but you have better money unaccounted for again. So let's say your parents actually helped you out that month, and they sent that, and then automatically everything's fine. Now on your summary page, what you see is that you have your spending habits. So basically you see April, May, happy B-Day month, and it'll show you, okay, this is what I spent on per month on, and this is how much I have in my total savings. May, happy B-Day month, and then here you see your spending habits. So you see how your spending changed over per month. Your wants went down coming into happy month. B-Day month, they went up because maybe you're living your best life, but your needs went down because maybe somebody was helping you out. Savings went down because let's say you're living your best life again, and then we didn't do other months. So this will show you over time how your spending has changed, and you'll be able to like track your spending. Now down here you have your saving habits. So per month you'll be able to see, okay, cool, how much did I actually save towards my emergency fund? It's color coded, and total in savings. So this is how much you actually have in total in savings. So even if I come here and I go to a random month over here, and it adds up to savings here. So let's say I come to savings, I put 1,000 out of the blue, and for there I put 300. Then automatically everything there you see immediately it bumped up this month, and then that will show you how much you actually have in your savings. Now over here it shows you month from month what will your total spend. So in April, May, let's say June, July, this your spending went down and went up in B-Day month compared to the previous month, but this was the total spent just on wants, needs, and towards debt. So any money that wasn't going towards saving, that was just going purely to spend. Now down here you see your total spent per month, and it will show you the breakdown of like, okay, wants, needs, savings, and towards debt, and this is the total money that left your account that month to all these things, and you see that breakdown. So this month you did more on needs, and if you go on it, it will show you the value. It says 800, there 600. You see the total if you hover above it. Now over here obviously you have understand money, so we've got a lot of resources, also different YouTube videos and different resources that you can go on to understand more about money, the tax system, student loan, credit cards, all those kind of things. Some of them are videos, some of them are other people's videos. Obviously subscribe to us. Now obviously here's the debt section. Now if you have a lot of debts, or your family has a lot of debts, there's 3 different methods of tackling debt. There's the debt avalanche, which basically is in terms of interest. There's a debt snowball, which is in terms of reducing the actual number of debts rather than the amount of it's owed. And the debt tsunami, which is basically in terms of in all your debts in terms of emotional impact. So if let's say your mortgage is stressing you out, take care of the mortgage first before you go and start taking care of your phone bill. Obviously, always pay your minimum payment of everything because you want to protect your credit score, and you don't want to, if you don't do that, that affects your credit score, which will make your life a bit more expensive in ways you don't really understand. Always call your bank or lender, especially for like banks. They're always required to show that they're actually helping you get through your crisis. So they're not supposed to be putting you more into financial hardship. So if you call them, they want their money, they'll help you sort it out. Balance transfer cards is if you actually have a lot of credit card debt, it may be worth doing, but if you're going to do it, always pay it off within the 0% interest rate. If you want to understand more about interest, if you click on here, it will explain to you more about what interest is, and you see links to it as well in the understand money section. Now this FAQs, obviously this is the tax bands. So for you to know your personal allowance, basic tax rate, pay a higher rate, additional rate, and obviously above 125, you lose your personal allowance, which is all included in the tax calculator. Student loan repayment, to understand what plan 2, plan 1, and postgraduate loans are, 9% over those values and 6% over these. Obviously needs, the difference between needs and wants. So think of lockdown. When you think needs, think lockdown, home, food, and transport. That's what you need as your needs. Wants is anything else, unless maybe it's affecting your mental health. Then stuff that does that may also count as needs. Credit score, there's videos about it. Credit card, emergency fund, pay yourself first. Remember, most of your, if not all your personal goals are financial goals, and we don't plan to fail, we fail to plan. So I hope hopefully this resource helps you out. Subscribe and all that good stuff. Now here's a note section. So you can't edit anything in any of those other ones besides where you put numbers in, but here you are allowed to do whatever you want. If you want to make notes, you can save it, you can do whatever you want in this one, so you can do whatever and then do that. But obviously if you come here, if you try to do something, well, if you try to do something here, it won't let you. If you're trying to do something, it won't let you here. So this is the notes area, so you can do whatever you want there. This one is open at the moment because I'm here, but you won't be able to use it. Depth area here, understand money, links, all that good stuff. Summary, again, you can't edit anything here. Anything you want to edit, you have to go to the spending track area to end it, spend it. You need to go to the spending track area to amend it. So like similar to here being B-Day month, if I came there and said, okay, cool, I want to change this into Boris, uh, then that'll change to Boris, and that all changes here. And obviously it's 13 months, and you can, we'll be updating this every April, especially because of the tax and take home pay, because every April it will change because of the tax year. So this is all of this. Now if I put all of this back to 0, anyway, I'll put it back to 0 before you get it, but you can see that you can now edit in all these things. You can't edit in here. This is just a summary, and this shows the month-on-month change. Budget, obviously you can adjust those, adjust these. Here will tell you if it can work or can't work. Custom goals, click on it, you get to us. Again, debt. Student loan per month or in installments. Tax and take home pay, even if you're earning £150,000, this is how much you take home afterwards, 3%. Let's say some CEOs are on 280,000. Let's say that. They're saying, wow, you guys will be there in Jesus' name. Click on there, you get to us, and pay yourself first. And obviously, if you want to change your student loan plan, let's say he doesn't pay student loan, then that's how much you take home. Automatically changes. If you student loan for plan 2 plus graduate loan, you have to pay both at the same time. This is how much you'll be paying. And now back to this. So yes, guys, thank you for. I hope this helps you out. And yeah, we're about to send you out. And have a blessed day. Take care, guys. Like, subscribe, duplicate this, and send this to somebody who may need this. And God bless you and your family. Smile and stay safe always.
So I hope that this seriously helps you out along your journey towards financial freedom, understanding your personal finance, financial independence, whatever goals you have, or just getting by in life. I hope this helps you out. The first thing I'll tell you to do is to duplicate this document, so that if you need to send it to somebody, or if you need to restart, every year around April, once the new tax year comes into play, we'll be sending out a new one, a fresh one for you guys all to use. I hope this helps you guys out as we help you turn our hindsight into your foresight. Now that it's become your hindsight, please turn it into somebody else's foresight. So subscribe, like, comment, follow us and everything, or come and become a mentor. Help us out, especially post COVID. Even during COVID, we're doing a lot of things, so get on board, and I hope you're doing fine. God bless you and stay safe. How to use this spreadsheet / budgeting tool, but first of all, I'm going to explain what Tickzon is. I'm not going to lie, I've put a lot of time into this. Obviously this is the beta version, so right now
the number of versions I went to get to this one, yeah.
I hope this works out for you guys, because I put a lot of time into this, so hopefully it helps. Shut up. Take care, guys.